Hi, Bob with Keller Williams. I'm going to give an update on what's going on in the market, and let's take a look at some of the things that I'm seeing, and I'll show you what's happening. I will tell you that the market. I'll take a second. Okay. So what I wanted to share with you guys is that we're seeing the active listings are, as you can see, it's up by 5%. Days on market actually down by 6 days. So we see the market's still very active, hot. Median listing prices are up, and new listing. This is per realtor.com year over year trending. As we take a look in April rents, you'll see that way up, right? And so, I mean, that motivates buyers as well to get into the market, right? Because ultimately, you want to know what your fixed costs are going to be. You don't want to be married into renting, and then, you know, you're at some point, you're going to be paying way more on rent than what mortgages are, even if we're at the 5%, 6% range. So sitting on the sidelines typically never helps, right? Freddie Mac mortgage rates, we're seeing a 30-year 5.25%, and I will tell you that I think it's leveled off. As far as increases, I think we'll probably see maybe some more corrections on that, but I think it's good that we don't see this trajectory that we've seen in the last couple of months, so we're seeing some leveling off. So that's good on that side. Existing home sales, in April, if we take a look at month over month, it's down 2.4%, and year over year down 5.9%. Median prices are up 14.8%. So still seeing a strong market. One of the concerns I personally would be concerned about is that if you notice that new residential construction, building permits is down 3.2%. Well, we were already down, and that has really caused, a big portion of the shortage, right? We're short over 6 million housing units nationwide, and you already see that consumer confidence, I think, that is definitely affecting, these builders are slowing down on, hey, let's see what's happening in the market, down 3.2%. And then housing completions are down 5.1%. And again, if we take a look at keeping current matters, really interesting. This is a home prices forecast to appreciate. When we're looking at, if you see Fannie Mae, they're saying 10.8%, Freddie Mac 10.4, CoreLogic 9.6, NAR 8.4, MBA 6.2. So even if you took the most conservative approach, we still see a trajectory of increases in the housing market. And then if we take a look at what's happening on California here on activity, you'll notice for the month, closed sales per day, 517 sales, pending sales 359, and new listings per day at 281. So obviously there's activity in the market, which is positive. What are agents thinking across the state? Closed sales at 46% down, thinking that that's going to continue to be down. Entered escrow 48.4%. Percentage change indicates a change of the last month. It's actually down by 2.2%. And listed a property 49.1. That's actually up by 2.4%. So it's really interesting to see, where these markets head. I want to take a look at this article on Investopedia, and it talks about the Great Recession and some takeaways. But it's really interesting how the millennials were really hit, in 2008. The oldest millennials are heading into their 40s. in 2022, millennials are buying homes at a fast rate compared to other generational groups. Many millennials graduated at the height of 2008 financial crisis, leaving them with high levels of student loan debt. So we see student loan debt forgiven or paid off. We're seeing them, head into the housing market. It's pretty interesting to see how that goes. But again, we're seeing more activity, but less housing out there, right? Unemployment. So it's really interesting. I was watching on employment actually is up. There's been more claims in California, fourth month in a row. So, we obviously watch that. We're not in a bubble. Nothing indicates that we're in a bubble, at this point. But I will say that what do we do when we have market shifts or market changes? We should prepare, and as we do that, you'll be in a better place. We should be saving on reserves. We are seeing, as far as products being sold from private labels, more generic products. So you'll see if you just even research it or Google, you'll see more sales are happening on generic products, and that tends to happen when consumers starts going, wait, I don't want to spend this amount of money. As we see prices and inflation increase, consumers tend to go to generic product. But home prices will be up, and if that's an indication that we'll continue to see increases, it means we got to get, buyers need to get off the sidelines and get, if they're looking for long-term investment. Say as speculation, always be very careful on what you do on speculation. Again, I'm Bob with Keller Williams. That's my little update for this week, and you have a great day.